Hey everybody, good morning. Trendy John here from Simpler Trading. We are going to go over our broad market analysis starting with the 28th of April 2024 and ending here on the 3rd. And then one of my most exciting weekends coming up, Cinco de Mayo. It's going to be an amazing week. I can't wait to start our 30-day challenge with you guys starting tomorrow. We will it's just going to be a really good time. So I hope you guys are ready. So again, 30-day challenge kicks off tomorrow. And we have in store, we have a lot going on this week, and I want to make sure that we capture everything we can. So let's go ahead and get started. Again, thank you so much for being here this morning. We're going to start off. You're going to be looking at this view, and then we'll get into some charts, and then I'll actually take you over to the platforms to look at charts on Thinkorswim or Trading Views. So don't stress if at first it looks a little blurry or something like that. Just give it a few minutes. YouTube tends to take a few seconds and then it will buffer. And so just give it a few seconds. All right. So again, today is Sunday. Happy Sunday. Notice that we have this week's U.S. economic reports and Fed speakers. I want to make sure that we are clear here that these are events that could cause uh, the markets to get a little bit of volatility in them. And we just want to be prepared for those events. We don't trade based off of the details they give us in this news. Remember, supply and demand gives you that edge where we're already lining up with the bigger money. And again, this just pushes price into those zones that we are going to go over today. All right. So notice on Monday we have nothing scheduled, and then on Tuesday we have employment cost index, S&P Case-Shiller home price index, Chicago Business Barometer, PMI, consumer confidence at 10. When we say consumer confidence at 10, this is Eastern time. Okay. So that comes in after the market's been open for about 30 minutes. So those are always something that you want to keep in the back of your mind that, some volatility is about to come in right after the market opens. Wednesday, we have ADP employment, construction, spending, ISM, and then most importantly, Fed Chair Powell is coming in. He has a conference. We have the FOMC interest rate decision. So far, it looks like a playing field could be set for Wednesday. So again, Monday looks pretty, there's not much going on. So price is just going to, I would say, just pay attention to price, right? But the playing field will be set up for Wednesday. So I can't wait until that happens. We'll have our zones, we'll be ready, and we'll be definitely waiting for that volatility to come in. Then some auto sales at the end of the day, and then on Thursday, initial jobless claims coming in before market open, U.S. trade deficit, and then unit labor cost, productivity, and factory orders. And then on Friday, U.S. employment rate, and then hourly wages, ISM services, and a couple Fed heads speaking. Okay. Then we have action pack over here, for me anyways, on earnings that are coming out. So this is for this entire week. And if we look here, we could see some really big names that are going to be reporting. I typically use the marker here to underline what I find interesting. Now, last quarter, so quarter one, I was doing a lot of debit spreads around supply and demand zones and to keep the alerts at a minimum, meaning they get a little not confusing. Well, they can get confusing because if I buy back spreads and stuff like that, it's just a lot of information. So I decided, and I brought this up weeks ago, that I would not be doing that in the account this coming quarter or this earnings season. But if you need a chart based off supply and demand going into earnings, please reach out and I'll be happy to either give you that chart or if I'm on live, go over that chart and kind of show you what I'd be looking for going into earnings. Tuesday kicks off with PayPal, Amazon, AMD, Lilly, Triple M, Starbucks, McDonald's, Penn's, Caesars, and then Wednesday, Qualcomm, Carvana, MasterCard. You have Norwegian Cruise Lines, Etsy, Estee Lauder, Marriott, and then on Thursday, Apple, Coinbase, DraftKings, Moderna, and quite a few other names. And then Friday, usually Friday is, you know, boring to me anyways, but there is Hershey's there, if you're into that name as well. So again, really nice lineup here. Semiconductors, depending on how AMD does this coming week, should be interesting. Amazon, I'm definitely interested in. I feel like off the top of my head, AMD is taking a big hit. It'd be interesting to see if these guys can get a bid or some kind of good information and kind of put them back in the running, if you will. And of course, I've always been a huge fan of Amazon. So very excited for Tuesday. All right. Let's go ahead and move on. We're going to look at last week's neutral strat. It works so damn good. You guys know that. All you had to do, this was when I first came up with the neutral strat many, many, many moons ago, years and years. The idea was after I had, and I understand this is blurry, guys. We're looking off of we're not using the actual charts right now from Thinkorswim. I'm showing you a copy of a copy, if you will. But you could see that we came down into the lower neutral and we pushed right out of there and we hit all targets to the upside and we stalled there. And we'll be talking about that stall a little bit later. But remember, I came up with this process for the trader who cannot be in front of the charts all day. This is for people who are working, who are in meetings, people who are out and about. All right. And the idea is I'm giving you this edge before the market even opens. Matter of fact, I'm giving you new charts today. It's Sunday, so you should be prepared. The way that you want to come in and look at the new charts that I'm about to show you is that you want to set your alerts. You can actually set up OCO orders with options, with equity to take these trades and not even be in front of the screen. And I have those YouTube videos out there on my channel if you want to take a look to teach you how to do that. It's really fun and can be exciting because, again, you don't have to be in front of the charts. So, again, both of these worked very well on the QQQ side. And here, let me see if I can, let's see, open image in new tab. Let's go ahead and open that, and then we're going to click on here. This looks a little bit better, but you could see that both of these never broke down below the bottom neutral, and because of that, we don't look to go short. Matter of fact, you could see we broke above the neutral, which gave you on Monday a great opportunity to go all the way up into T3, which was 508. And then over here on QQQ, your trigger long was 416.86. And then again, by the end of Friday, we're moving from 416 all the way into the 432, 433 range. So again, both worked really, really well. Now, let's take this. I'm going to move this for a second. I'm going to come up here, and now we're looking at the Thinkorswim platform. This is the new neutral strategy for this week. This is where you want to go ahead. One, give me a like on the video, please. Let me know that you enjoy the content. And two, this is where you freeze the screen and you place these levels on your chart. If you do not know how to trade the neutral strategy, I have a very quick 3 to 5 minute video right here on YouTube that you can watch, and it's going to help you understand how we trade this. All right. Now, again, I'm using supply and demand. I'm using some Fibonacci. I'm using the cloud. I'm using some structure. All these things I teach right here in the room. Matter of fact, during this 30-day trial, we're teaching all this good stuff. All right. You can see targets to the upside are going to be resistance until proven otherwise, and targets to the downside are support until proven otherwise. Now, what's really interesting about the setup this week is that we're still not out of the clear. And again, I'll talk more about that when we get into the futures here in a second. This could still turn into an H pattern. So a lowercase h is where we come up. Everything's looking really good. Remember, we were looking for the relief rally. We got that, but we're not out of the clear. Like we do not have structure that's closed above the resistance yet. And because of that, we could easily pull back and then you get this H pattern. And I like to call it the hope pattern because, if you got sucked into the move, then you're really hoping that this is not the move that's going to continue down because you just bought at the top. Okay. So again, I'm not saying that's going to happen, but just understand we're still in those boundaries where that could produce a lowercase h pattern. Okay. Let's go ahead and move on. We are going to move into the bigger picture. And at this time, I'm going to bring you into TradingView. So TradingView, I do get this question a lot. You know, my indicators that I use, they're on both platforms, TradingView and Thinkorswim. But I use TradingView because it just scrunches up price action just a lot better, and I can give you a better view. So I'm going to use the quarterly when we're talking about the bigger picture. Now, I write notes on here. The notes have started from the beginning of the year. So again, if you've been following along here in the room, you know that we have coached and really at the end of the day have really analyzed the market very, very well since the beginning of the year. And you can see that in our notes here. Now, as far as the notes today, the fib of the 23.6 was indeed support. That's what we were looking for. We got a great week last week. I did really well. We got the bounce that we were looking for, and we are currently working with an inside quarter. So again, it's a quarterly chart, meaning every candle here represents one quarter. Okay. And we have 2 months left in one day. So everything that I'm talking to you about here, we have no idea if this is going to stay an inside candle. And because of that, especially going into this week, we have some very important things we want to look at. And that is that we want to look at the 23.6, which is support, which is around 497. And we want to look at the bigger picture, meaning last quarter we closed. Like, where was last quarter's close and where is support? And because of that, I want those two levels to be what your focus is going into this quarter for now, unless one of these are broken. So, really, at the end of the day, this is a neutral level, right? We have support and we know where our close was from last week. And those two levels, it's a if this, then that. If we break down below support, then things start to look a little uglier. If we break above last quarter's close, then we start to see a continuation pattern. And matter of fact, if this candle within 2 months and one day starts to look like this is what we call three white soldiers. So this formation right here. And this is a very strong pattern, and it's a very likely pattern actually at this point. But again, we have 2 months, one day, and we have a if this, then that scenario. So really, I would find those two levels, mark those with alerts on your screen, and just know that if we pass one of them, you kind of know what direction we're headed into. Okay. Now, specifically because I'm saying this on a quarterly, my focus is on the lower time frames. All right. So lower time frames, but I'm monitoring this quarterly for those two major levels. Overall, you can see the cloud has worked very, very well in the past. I like to remind you all of this all of the time that this cloud is where the big support is, and it is confluent with a demand zone for 2024, if you will. So, if in the event price leads to the downside with some sort of very volatile move that you're not anticipating, that I'm not anticipating, my first level of a really strong entry and buying time would be down here at the cloud. There's just so much confluence, and I do not want to forget to tell you about it every week because I know that in the market we typically get anywhere from 1 to 2 major events per year. And you go back and you look and you go, damn, I wish I would have bought that, right? Well, we already know where that level is. So we have confluence inside enough formation, we have a buy signal, we have the 9 EMA, and we have a Fibonacci right here at the golden fib, and all of this is confluent in that area. So if for some reason we get that event, just remember that is the area for me where I want to be looking at a really strong buy for, at least 6 months out. All right, let's go ahead and move on to the Qs. Bigger picture, same thing. We're going to be using the quarterly here, and the idea is the same. Everything worked really well. We came into support, we bounced out of that 23.6 fib. I've taught you how to find that 23.6 fib. The bullish channel served as support, that's what I call it. And just like we expected, use the last quarter close and the 23.6 as a bigger neutral. The numbers there are 445 by 423. Because of this, I will monitor this chart and trade off the lower time frames. Okay, and we'll get to lower time frames here in a few minutes on the ES futures and the NASDAQ futures. Same thing, this cloud has been nothing but support for so many years. I wouldn't expect it to be any different. You can also see that there's a lot of confluence here inside enough formation, buy signal, 618 and the 9 EMA. So again, if price were to come back into this area, I would be ready and prepared to buy for what I would expect to be an election rally after a really bad event in the market. Again, not anticipating, but if it comes down there, I have to go over it. Second thing is, it's an inside so far, but still we have 2 months and 1 day left. Because of that, we won't know until the end of the quarter whether we have that continuation candle or not. But what I do want to know is where those levels are. If we cross the previous quarter close, I'm looking for that continuation up or those three white soldiers, just like that. And if we start to break down below support, then I'm looking for these Fibonacci's to the downside. Really straightforward. Now, because we are in the mix of earnings here with big names coming up, I'm not expecting any major moves. Maybe volatility, but I think we're range bound until investors digest what they need to digest when it comes to numbers and so forth. So I am not a fundamental trader. This is not investing. I am a trader. I teach a process to trade, but I do have some knowledge around. I was a director for a major company, so I understand numbers and understand what investors are looking for, but at the same time, my focus is technical analysis. Let's go ahead and move on to something I find very important when doing this broad market analysis, and that's going to be the DXY or the dollar. We do not use it from a quarterly standpoint, but I have brought to your attention for the last several weeks that the dollar, it just looks like on a quarterly, it's ready to go nuts to the upside, right? To this higher supply zone. This supply zone, though, we found last year and is working really, really well to reject price. Okay. And the last 2 weeks, all right, we've really dialed this in and said, listen, the 88.7, I told you we're going to hit that. The probabilities were 85% once we got over the 618. And because of that, we knew to be cautious to the upside. But once I saw the rejection come in at the 88.7, and you could see this yearly edge over here as well. Once we hit that, I predicted, I hate that word. Sorry, I said that. I anticipated that price was going to pull back from here, and that meant that we could be seeing a relief rally. Right now, last week, that relief rally didn't come in the form that I wanted it to. I think it lasted for like a half a day. But this week, it really paid off, worked very well. We hit the 88.7 again, and I said, look, as long as it rejects, I think we're going to get that move back up. And that's exactly what happened. Okay. Nothing's going to change coming into this week. As mentioned above, the 88.7 remains a wall, and we indeed got the rally we were looking for. All worked last week. Let's use the same analysis. Caution above that 88.7 and a rally under as long as we can stay under. So watch your DXY closely. You can come over here on a smaller time frame. If we're rallying in the dollar, just be cautious. And if we take off and start to get over this 106.5, then for sure it's just not a time for me to be looking at getting too accelerated to the upside. Okay. Next thing, this one, really, really is the yin to the yang, if you will. But the TNX, the 10-year treasury, my biggest thing here is I want to see it calm down, right? It's in a supply zone. It can definitely pull back. It looks extended. And this, yes, and I use all the same analysis for whatever chart we're looking at. Whether you could trade it or not, I use the same analysis. It looks extended. It's in a supply zone. I'm looking for it to come back, but I want to see signs on a smaller time frame. So this week, we're looking at the 4 hour. And what I note here on the 4 hours, I took two levels. I took your high from last week, okay? And then I use this gap fill here, and I'm saying within this level, this is a neutral, all right? And so if we can go sideways to down, things look good for a continuation rally to the upside. If we start to bid basically above this level, again, most likely the dollar's over the 88.7, and the TNX is now looking really angry, and we're going to hear about that through different sources, and the market's going to pull back. All right. So alerts for me would be above here, and alerts would be for under here. All right. But as long as we stay sideways to neutral and the dollar stays off that 88.7, then I expect a little bit of rally here. All right. Let's talk about the skew. I can't be so proud of my analysis. And again, I say that because this is something that I came up with. We've been using this for so many years, but I came up with this area last year because I did not want to repeat what happened in 2021. And that's like thinking that the market's going to pull back. So you get really scared. And if you've watched any of my previous stuff, then you know we were all over this. I changed this to buy calls plus 5 to 10 days out when the skew come into this level, and it worked like magic. Not only did we get a really big rally this week, but it did exactly what we were looking for, and this was based off of data looking back over a year in this area. So, what do I think about the skew this week? I think that it's important to take note that when I look at the skew, all right, in this area, I'm looking for the SPY and the QQQ to go up. But now, if the skew is coming into resistance, and I were to imagine the skew kind of falling back to the downside, what that means is more fear is creeping in the market when the skew starts to drop. More people are jumping on the put side, right? So your participants are scared, they're buying more puts and so forth. Because the skew is coming to resistance, means the skew could pull down. If the skew is pulling down, that's where that fear and those puts come in. All right. So hedge funds are starting to protect themselves. All right. Now, because I can see that before it happens, and because we're at these resistance levels, it raises my caution, my yellow flag just a tad. All right. So just take note of that. Um, if we can get up and over this cloud, you'll notice that the rally has basically been able to rally the market's been able to rally even above here. And these are extreme levels. So in the past, this would be like, hey man, I need to be careful. Let's buy puts. But that's what I'm saying. This entire year, we're staying in a very, very tight skew levels, and we have not hit the extreme down here in a very long time. It's been actually since December looks like December 22. All right, so it's been quite a while since that's happened. So for now, we'll just play within this range. Basically, we go long down here, and we can get to that extreme greed again, if you will, up here. But this cloud and there's a trendy edge in there are resistance. So that's kind of like that line in the sand. So think about it. The TNX is basically at a line in the sand. The dollar is at a line in the sand at that 88.7, and the skew is coming up here into resistance, which would be a line in the sand as well. Moving on down, we are going to look at the fear and greed index. So just click on this. Give me 1 second. There we are, right here. We are at 42, which is 11 points down from last week, or up, sorry, meaning that people started to feel a little bit better about the bounce. There's still fear in the market, so not everyone's convinced. But this really makes a lot of sense on the way that we trade. And if you remember, the masses, right, when the market was coming down, I'll show you here on the ES and NASDAQ, we were waiting to go long. Most people, and believe me, I watch a lot of traders, a lot of sentiment, a lot of people didn't start to get bullish here until the last couple days when we had already bought here and trimming and or closing our profits. And that was on, multiple names this week. Yeah, it wasn't a bad week. So this is exactly what I teach, and I hope that you could see how we have the edge over most traders. All right. So again, they're starting to feel better right towards resistance, is what I'm trying to say to you. Okay. Let's get into the futures. This is the most important part of my analysis, in my opinion, because I use the ES futures to trade SPY, SPX, and really to guide me in my overall sentiment for the entire week. All right, so this is a week by week basis when we do this. This is the ES futures, and what I find very important about this, I'm sure you guys all follow me out on X, but you can see here, this was last week, and this was called a buy zone. This is a demand zone. All right, so we were looking for price to come in here, and then this is the result. And I'll tell you what, folks, this is huge. All right, this is huge. You can see we moved up, but there's a lot of notes that I want you to take from this. One, the buy zone worked. All right. But there's a lot of things going on. So these are the things I want you to note for this week. We're going to snap fibs, which I've already anchored them. All right. From that pivot to here. You'll notice that price also stalled at the 50. It stalled at the 50. It stalled at the cloud. All right. And let's see what else. Notice the top of the cloud stalled. Oh, and there's a trendy edge right underneath here that you guys can't see. All right, so trendy edge, the 50, and the cloud. Three levels of resistance. When price is underneath it, it is resistance. So please take that note into everything I told you about the dollar, TNX, and so forth. Okay. What do we expect at the 50? We expect chop. All right. So it's going to be a little choppy maybe coming into Monday after, a nice little week where we had this really beautiful inside candle and as we prepare for Jerome. So it might be one of these things where you want to be a little bit more patient, maybe sell some credit on Monday, maybe. All right. Again, price will be, price is king. We'll be watching price. So the things that I'm saying right now are not necessarily going to happen. They're just things that I want to point out. The 3 weeks down, 1, 2, 3, remains in a downtrend until price can sustain above the golden Fibonacci. So basically, you could just say 51.92. All right. So again, I would have an alert right here to let me know, hey, price is going above here. It's created, it's created well, it's now went from a downtrend into an uptrend. So that is going from a weekly standpoint, that is a very big level for us. Okay. Now, the next thing is note last week's closed, well, sorry, this week, well, last week closed inside. Well, that's what we're always looking for. This is your initial candle. This is the inside candle. So we go inside and up, okay? Or we can go inside and down underneath this threshold. And so again, the major level would be here and then above that 50, okay? And then we got to break that trend right here. I'll be looking for the inside and up and inside and down. I'll let you know regardless if we've moved over that. I don't anticipate the market pulling an inside and down this week unless Jerome says something that just totally craters the market. Then we could see something like this and a continuation down into the trendy edge and that next 9 EMA. Okay, let's move on. This is your daily blueprint. Okay, this worked really well last week, and we stalled. This trigger short was actually right where your resistance line is here. So I replaced the two. So if you took the short trigger, it worked very well to the downside. But these are new levels for this week. We have a trigger long at 51.12 and 50.74, and our trigger short is 52.22, and your resistance is 51.45. Okay. Again, we do not trade immediately off of these triggers. We go to a lower time frame and then we coach around what we're looking for at those triggers to see if we actually want to short or long at that level. Let's move on. This is the 4 hour. Nothing has changed from the supply zone. Another confluent level that tells me we stalled on Friday right at the supply zone. Bulls, you're going to have to get over this level. If not, then it just kind of goes with the theme of everything else I showed that we closed on Friday at resistance. And we may get that opportunity to dip by at the 4 hour cloud. Again, the cloud is an area of support. And if for some reason we uh, open up tomorrow morning down, then I'm looking to buy the dip right at this cloud for a few to several points. And if for some reason we continue to break down under there and I get stopped out, then I want to be looking at loading back up in this zone down here at 5077 by 17. Okay. Let's go ahead and move over to the NASDAQ. and we're going to go to the weekly. And just like me showing you the ES, you guys can see that the NASDAQ was absolutely beautiful as well. Okay, and I'll bring this down so you can see it. This was last week. All right, we had a buy zone. This was the result. Okay, worked very, very well. Price, just like the ES futures, look where it stalled right around the 50. So your notes, okay, for this week is going to be apply your fibs. Price stalled at the 50. Now we have two confluent resistant areas, top of the cloud and the 50, okay, and expect chop at the 50. The 4 weeks down remains in a downtrend. 1, 2, 3, 4 remains in a downtrend until we can break above the 618. Okay. That's around 18,100. Let's just kind of increase that by a couple points. 18,100. And note last week we closed inside. Initial candle inside. And so just like the ES, will we go inside and up? Okay, boom, something like that. Or do we go inside and down? And again, this is a big buy zone. And I just don't anticipate anything major where we'd close below the 16,547 this week. I could be totally wrong. And if we do, then we'll go, and look at the levels that we have down below, which is going to be around 15,970. But again, with earnings, Jerome, all that stuff, it just looks like we're kind of setting up um, the playing field for Wednesday. All right. And we had some major names on Tuesday and Wednesday. All right. On the daily, let's go ahead and take a look at that. These are your new levels. Again, resistance, 17,911. Trigger long, 17,716, 17,704, 17,451. And your trigger shorts actually really way up here. Now, the reason why I did that is because in the back of my head, I'm thinking Amazon, I'm thinking Apple, all these names could create a really big move. Because of that, I want you to understand that you know the cues, they basically lead most of the time in the market. So although my trigger short is closer in the ES futures, I'm looking at this as saying, hey, if things hit on all cylinders, things go well, Jerome says something dovish again, then there is a possibility that these things really take off. And again, we don't want to necessarily just go short just because we hit that level, but we want to be aware of the level. And once we get there, we go to a shorter time frame. Same thing on the trigger longs, guys. All right, got some support that we're trying to build here, but overall looks a lot like the things I showed you on the ES, or sorry, the SPY and the Qs, where this could just end up being a lowercase h. Most importantly, my sentiment, I want to go over that really quick, is going to be neutral. And the reason why I say that is because we don't know on the TNX, the dollar, the skew, if we're just going to get up and over those levels or if we're going to reject at those levels. All those things are really important. My my summary would be that we are basically at a line in the sand coming into this week. We have Jerome speaking, we have big earnings. It feels a little choppy until it's not. So, again, folks, that's my summary. That's my sentiment. Choppy until it's not. I hope that you enjoyed this. And again, please give me a like. And if you have any questions, please ask in the room. Don't forget our 30-day challenge starts tomorrow. And that 30-day challenge is again being led by Melissa and I, but she has grown her account over 5 times since using our methodology. And she's going to show you how she's done that. And I can't wait to journal with you and trade with you. Let's have an amazing week. We'll see you soon.